Good evening. I started the first part of this training of forecast around 7, a bit after 7. I only discovered that it was only capturing my voice and not the screen. So I had to, you know, go over it again. Now, going over it again now, this is US dollar index, and this is the weekly chart. And we said we are trying to work against this resistance here. And we have seen this as a 1, 2, 3, 4, 5, and that what is probably going up could be a wave B or a wave 2 of this entire run before we go down again. Is that a wave 1, 2 to the downside as you see, or a wave 1, 2, 3 to the downside? So if it's going to be a B or a 2, we will see. It's the B and the B and the 2 wave, the second wave, they are almost the same. It's when it's now coming to the downside and it goes beyond the corrective pattern. That means it's going to break 100, 123, it's going to break 161.2 to the downside. That tells you it's not a B wave to the downside. Sorry, a C wave to the downside, but it's an impulse, which is a 161.8 more. So, but that's still a long way to go. But for now, we are going up. The problem with many traders is not, okay, you can understand the structure that is trying to print, but on the lower time frame, what is the direction I should choose now? That is the problem with many traders. So we are going to go over that to see, okay, what are we going to do on the lower time frame? Will this continue to go up now? So we find out, oh, we're not going up now. We're shortly going to sell again to go up. Then we now look for a sell. So this is what we are looking at on the US dollar index. For now, we are seeing that we had moved past this level, we have broken it, and we are looking at this structure of a major fall here as probably where price is going to turn to the downside or breach it before we come down. So we want to make out what this is going to do, but the clue is right on what is cooking at the moment, which we are going to see. Now, looking at that, let's look at the DXY to see what DXY is also trying to print. Just like we are seeing with US dollar index and the DXY, they move to the upside. If you take from the primary two to where we are seeing this move to the upside, it is really at 38 or a bit over 38.2 retracement so far from 2 to the down to the upside. So could it be a major fall that we're going down? So if that is the case, probably we are seeing an extension on wave 3 to the downside. But from the price action I can see, and I think what we are trying to do is we have finished this as a 1, 2, 3, 4, 5 to the downside, and we are doing an APC correction, probably a zigzag to the upside before we come down again. That is what is resonating with me. So now let's now go to US dollar in euro dollar. Going to the euro dollar, which is an inverse of what we had seen on both US dollar and DXY. So the euro dollar, of course, we are looking at this point here of 7,250 and this point here as a possible point 1.0650 as an area where price will finish correction to continue to the upside, except they want to have a more deeper correction. But we will see. The mood this will give us the mood or set the mood. Now, do you think that price will just finish here and continue to go to the upside and bounce to the upside? Now, the impulsive nature of the corrective wave will tell you that, oh, because it's an impulsive correction of the wave to the opposite side of the move, it's likely going to grow into an ABC on that time frame. Now, we are not seeing the internal structure of this until we won't see it until we go to the daily time frame. Now, going to the daily time frame, we can now see the impulsive nature of this on the daily time frame. We are told this is an A, B, and this to the downside had gone beyond 161.8 extension. And we thought that, okay, after this, we should have an AB or a B wave to the upside, then come down once again to finish C. And that C should come down with a deviation or an ending diagonal. So if that happens, then we are sure that we are done and we are going to the upside. But what are we going to do here? What exactly is being printed here? Wave will not just come down here and not burn itself out properly. This cannot just turn up sharply and go up to break the top. Look at this wave to the downside, for instance. This wave was coming down and burning and burning. So you can see the curve. If you want to draw a curve from the base here, it's like a curve C. If you draw it, it's like a curve C to the downside here. So this is like, okay, it has burned itself out, then we can see this move to the upside. And before that will happen here, we'll see it's a burning before it moves to the upside. But what I'm seeing here is a doji indecision here, if you want to literally interpret Friday move. But these, I would think that would have one more leg to the upside to finish a B or a 2 wave, and this will come down as a C wave before we go up to break the top. That is what I will be looking at. Then probably it will make sense to us at the end of the day, but we still have to look into this. So we are seeing the appearance of this on Thursday to the upside, and it's still corrective. Now, let's look at the inside of 1 hour time frame of this particular move to the downside here to understand what the price is trying to do. And I want us to also understand something, that when price is printing like this, your movement, which we call a corrective wave of ABC, can indeed be corrective. But again, your ABC can also be indeed the beginning of a new wave. So we must now understand how to differ the two, that the ABC is actually indeed corrective or the beginning of a new wave. So our understanding will always guide us on how to protect our accounts. Otherwise, you would just enter in a wrong way or a wrong point and lose your money because you think, oh, it has to be this. No, it doesn't have to be. Even though it's an ABC, you have to do it. This ABC, is it corrective or is it the beginning of a new wave? First, we are taught that this move, because if you had looked at this wave on the DXY or US dollar index, you will understand that it had gone to the downside as a 5-wave structure, which is an impulse. We are taught that these had marked the end, because you can see that this the 5th wave here actually close to the downside as an ending diagonal here. You can see it the way it went to the downside, and we are taught that this had finished the move to the downside, and that this is the first part of A. We are going to see a B, a C, and after that we are going to come down. But they didn't do that. But this is how the trick to guiding yourself, which I want to show you. So if we are taught that these had marked the end of the correction here, and we're going to do an A, B, a C to the upside, the C shouldn't have broken this. But the clue of guiding yourself is actually here. The clue of guiding your account is actually here, because we are thinking that, okay, if this is an A, I want to come from the end of B to sell, to buy a C, and at the end of a C to sell the big C wave to the downside, because that would have been an A, B, C of B and a C wave to the downside. That was what we were planning. But the clue not to blow your account is here. Now, we're going to look at this. Just pay attention to it. If this is an A wave and it has completed itself by breaking the structure to the downside, which structure can you see that this has broken to the downside? Let's go to the 15-minute time frame so that you understand structure break to end a particular move, even of a corrective move. You have to understand that. Please pay attention. You might need to go over this video over and over again. Now, even this has given you this, you don't want to trade it immediately. So the structure break is that you see a structure here. After this move, a correction, the price went up. You will even see more structure on the 5 minutes time frame. Better, let's go to the 5 minutes time frame so that you will understand the structure break on that time frame. Once you understand the corrective format, good. I think, yeah, it's here. This is the A wave. We thought we have finished this ABC, a big ABC to the downside. We want to do ABC of B to run down. That's what we thought. So this wave, you don't want to trade it if you except, okay, you might say, okay, there's a structure break here. You want to trade this to the upside. You could have done that. Immediately you notice structure break here, you could wait around this fringe to pick your trade to the upside. There is a whole lot you can do to adjust. But again, you can allow it to finish and look for a B wave to go up and right up the C. So, which is the structure break that we see here. So we are thinking that this is an A wave. So, and on the 5 minutes time frame, so on the 5 minutes time frame, we are taught that the C part of this A wave is where we see a 4 and a 5. And the structure you are looking for is a break here. And to look for a break here, that, oh, indeed is a break to the downside, what you have to do is that you have to take from the low here to the upside and look for a retracement that is more than 161.8 to the downside. So if the retracement to the or extension to the downside is more than 161.8, then you know that this one that is going to the downside is a new wave. Let me show you what I mean by bringing out this drawing. So we thought that this went up, this one came down, then we had probably the fifth wave, and this broke the structure here. So what we want to do is to come here, take this move from here. No, we are actually going to the downside now. So from here, from that low to the up to the top, and we want to see, because this is 161.8, because whatever is coming down, if this one went up like this, whatever is coming down can still be part of corrective wave. But once it takes 161.8 out, which is at this level here, this point here, then with this candle, you know that what is going down is not corrective. I'm just showing you a trick to know before wave builds up, to know that, oh, what is coming down is actually corrective. A wave had finished. By looking at the 5 minutes time frame, this had gone beyond 161.8 to the downside. So even you don't have to even follow it because it has broken here. This is the level it has broken. So you are looking for what is going to do again. By saying that this had finished itself, I know from here or from this level, this wave is completely gone. Then we are building a new wave here. So if this is an A and we want to do, okay, this has ended the move, you can assume anything. It's not wrong. When this is one is A, we want to do a B wave of this new move. So you see this as A of B. After the A of B, you want to see the B wave of that B wave as a triad, which is A of B, a B of B, and a C of B. So we have finished these as initial A of that wave. Then the B part of the B, A of B, B of B, and a C of the B. So this triad here finish a B wave of this A, B. Then the last part of C of that B wave is what should come to the downside. So in saying that, okay, that is the part that should come to the downside here, what you want to see that you don't want it to see that this move in itself should not break 161.8. So if you take this as an A and an extension to the downside, 161.8 should fall where this red is. So at this point of the red, price didn't touch it, and you pick your trade that you want to go to the upside. See, price did this and came down to take everybody out. It's not a gimmick. They are still building a structure, but probably we are too fast to get in. And that was why I gave you a very tight stop loss at about here, 9.8950, around this area, very close to 161.8 because of the broker. So if you are taking out, don't sweat. So that is how to be taken out nicely without losing anything. Now you are taking out nicely and the price came down to break this, definitely is not a corrective wave. So I know that I thought that this is an A and this is a B for us to have a C. For price to have broken 161.8, it is not corrective. So what is this then? So let's go to the 5 minutes time, 15 minutes time frame. Going to the 15 minutes time frame so that you can capture the mood. So at once, then what it is now is that actually this has become the third wave 5 of 3. So it has given me a 1, 2, 3, 4 of 3, and 5 of 3 here. And this one becomes a major 4, even though it slightly broke this to the upside, it's a major 4, and wave 5 had finished here. So if indeed this is wave 5, on a 1 hour time frame, I should see this as there is a deviation here, you know, on the RSI. So let me look at 1 hour time frame to further confirm. On a 1 hour time frame, let me bring out the RSI. So the RSI is lowest at this point. And at this point of 5, it's high, a bit higher, you can see. So that confirms to me in a way that what we have seen so far, it's a 1, 2, 3, 4, 5. And so this is just with 5 of 3, with 4, and with 5. So this came down in 5 waves in an ending diagonal, a 1, A, B, C of 2, then the third wave, the fourth wave of it, which is an A, B, C here. Let me show you the standard structure of that so that you will see how that spike came down to finish up. So a 1, A, B, C of 2. Then the third wave, A, B, C of the fourth wave, and this one came down like a flash to finish wave 5 as an impulse. So wave 5 and an impulse, finish this one. Don't follow my labeling here as a 2. Don't follow it. Just we know that we have finished a move to the downside. Finishing this move to the downside means that this now could be an A. If it's an A to the downside of 5 waves, we are expecting what is going up to be a B to the upside. If we are going to see a B to the upside, then that means we are going to come down to do a C. But if this continues to go up and break the top, then it will now make this wave here as a 1, this as a 2, and we are going up again to do a 3. So that is why I put this one. It's tentative. But what I'm going to go with is I see this as an A, what is going up as a B, and that we are coming down to do a C leg. We need to finish what is happening here first. Now, to finish what is happening here, now, which way? So if we believe that we have finished this as the first part of correction of a larger A to the downside, we are seeing the move to the upside as a B wave that is going up. So if it's a B wave to the upside, we want to see this as a part of the move to the upside. Then we want to see the way and manner this one is going to correct itself to the downside. So the correction that I'm seeing here now could mean that this is A of B. Then we want to see the middle here, how it's going to form to give us a B of B for us to have a C to go up. So this came down as a 5-wave structure. If you look at your 5-minute time frame or 1-minute time frame, you will see this one coming down as a 5-wave structure. It has broken the structure of 4 here. It has broken the structure of the 4th wave here. Now this tells you this is a new wave. So this might just be A of B, probably a B of B, and we might see a C of B to finish a B wave. Then we have one more leg to the downside, and from that point, we are going to pick our trade to buy. And when we are buying, of course, we are going to guide our stop loss also in case price wants to still continue to the downside. Maybe price had finished his move here as a B wave. Why? Why? The why is this. If you look at the entire run to the downside here, what recovery have we had here in terms of fib retracement? Fib retracement from low here is almost 50. So that may or not. So, but what I want to see, because this is a sharp move to break this structure to the upside, then we are seeing a correction to the downside. We should see this as an ABC for us to look for a buy. So we are going to look for a buy. So after this buy, after this correction to the downside, we want to look for a buy to go up and look for where to sell a B. And probably we are going to guide our stop loss, but we should be looking for where to sell sell a C to the downside. That is what I can see. That is what we are pitching for now. If you go to the 4-hour time frame, so we want to, for now, look for correction to the downside, sell a wave B, and guide our stop loss in case it wants to continue to break to the upside. We are going to follow that structure as it's going up to know. But what I can see is that this is a 3, 4, and a 5. Then we want to see a wave 2 to the upside, or wave B to the upside for us to have the last leg of a C. And that last leg of a C may break this bottom or not. It doesn't really matter. If it breaks this bottom, then it's now going to give us an extended flag of an A, B, and a C by breaking it to go up. But if it does not break it, it might just be a running flat or whatever to it as an A, B, C, but it doesn't really matter. I'm not going to look at this as an A, B, C for now. I'm going to pay attention to this correction to the upside for me to look for probably probably sell to the downside again before we turn up. So the direction of the move is to correct A, B to the downside, look for a buy. We have not lost anything really. Still look for a buy to go up, then turn down again and break down to do a C. And after that C, then we can look up. I haven't said that the same scenario is going to be on the on gold. It's the same scenario on gold. The same scenario on gold that has built itself, you see. Then you can see this also as a 1 and a 2, a 3, a 4, and a 5. So the same thing on gold. The same thing on gold. So we are told that this is an ABC, but of course, a small ABC probably finished here. And these are run 1, 2, 3, 4, 5 to the downside here. So this may go up here as a B wave or as a 2 for a much longer way to the downside, but we are going to follow it as it's traveling to the downside. The retracement to the upside is also about exactly 161.8 here, 61.8. But I still believe that the price is still going to correct to the downside before it goes up. So that's what we are looking at. We are looking at the internal structure of that wave because euro dollar and gold has printed almost similar pattern. So where we see this as an A, the B part, A part of B, A, B, C of B, just like a 1, 2, 3, 4, 5 to the downside to finish this wave. And now we are now seeing this explosive move almost immediately to the upside for you not to catch the price. But the price will still present an opportunity for you if you can read what is happening. So for me, this is the first move of a zigzag to the downside. And this is seen as an A, B, probably C of B, and to have a C for us to pick a buy. So it's the same scenario that I'm looking at. And if you're going to read this structure, we'll wait until this B is completed and we break the bottom once again. Then we can now begin to look for our trade to the upside. And it's going to be a tight stop loss. Once we pick our trade to the upside, then look for price action. Then we can go up again. I think with that, I've come to the end of today's video. Do like and share and subscribe to these channels. Thank you.